Has the correction in the US stock market completed? It looks so, especially when you look at the price action on the last trading session. The market gapped up and then there was a formation of an inside bar, which indicated probably the loss of downside momentum in the market. Earlier, the market sentiment deteriorated in the past week. In the prior week, the fear and greed index was reading at 60, which fell down to 49, and thus it is in the neutral zone. Why did it happen? Probably the job data which was released for the month of October, where the US economy created 12,000 jobs, which was far lower than the expectation or estimate. If you look at the trend of the S&P 500 index, the trend remains intact. It is still bullish. The market structure is higher highs and higher lows kind of market structure. And the correction is a normal thing that happens in the markup phase of the market. And that is what exactly is happening. Although the last week ended little in the bearish note, but the correction is not very deep. Even if the correction further extends, I don't think the correction is going to be very, very large, because there is an immediate support that we will look when we visit the price chart and undertake the technical analysis of S&P 500. By the way, this channel comes with the live streaming session on Market Pulse, and in that live streaming session, we cover other indices like Nasdaq 100, Dow Jones Industrial Average Index, and Russell 2000. And this live streaming session is significantly important because this happens just before the week starts, where you get the opportunity to ask about the technical analysis of your favorite stocks from the US stock market. I am D K Sinha, welcoming you to the channel. Don't forget to like the video, subscribe the channel, hit the notification bell for updates. Let us straight away move to the price chart to undertake the technical analysis. This is the weekly price chart of S&P 500 index. Index in the last week finally closed at 5,728.80, and thereby it was bearish by 1.37%. Let us check the historical price action. It was a massive bear market in S&P 500, and the price then recovered, and before that it made some kind of inverse head and shoulder. You can see the left shoulder, head formation, a right shoulder, and a breakout. And then this was a throwback to the neckline area of this inverse head and shoulder, which is a reversal chart pattern. And now then what has happened? It was the all-time high earlier, and it gave a breakout over here. So this was virtually a rounding bottom chart pattern spanning 2 years, because the correction started in January 2022, and finally there was a breakout in the month of January 2024. This was the decisive breakout. So earlier in this channel, we have already explained the possible targets way back when the breakout took place in January 2024. What was the potential target? Let us again calculate it. So the first target which was arriving here has been achieved. The first target has been already achieved, and then this correction has started, which was quite obvious because the price became overextended. Now the next potential target is coming 6,500, which is 100% expansion with respect to the rounding bottom chart pattern. And we all know the targets of any chart pattern is the minimum expected objective. So ultimately, these are the intermittent corrections where market always makes impulsive wave and corrective wave intermittently. And finally, it is reaching towards 6,520 level. However, this rise will not be in the straight line upside. There will be formation of a impulsive and corrective wave like this. So market always forms the Weyl formation. Now let us further check the important price action in the recent time. If you look at the prior impulsive wave, this is the well-defined impulsive wave. This was the corrective wave. So there are two things which is very important here. One is the breakout of this resistance. So this was a prior impulsive wave and it formed the continuation chart pattern, which we call it cup and handle chart pattern. And now this level is a neckline area which comes at 5,650. So 5,650 becomes an important support in S&P 500 index because it coincides with the neckline of this cup and handle chart pattern. The second important level is, which is very significantly important, if you do the retracement analysis of prior impulsive wave that is started at 5,402 and finally it ended at 5,878.46, which happens to be the all-time high of S&P 500, and then this correction started. So 38.2% retracement level, which is nothing but the derivative of the golden ratio, falls at 5,690. And here you can see the price earlier has taken support. So 5,650 to 5,690 is the important demand area in S&P 500. Look at this rising trend line, where the price has taken support here, price has taken support here, and this was also a support because the market gapped down but ultimately recovered to close above the trend line. So this trend line itself is intervening in the demand area, which is acting as a dynamic support in S&P 500. Now let us move to the daily price chart to understand the price action further. Here we can prominently see the cup and handle kind of chart pattern. This is a cup portion and this is the handle portion. So this area is an important demand area, which I have explained just now. Now, which I was referring to, there is a sign of loss of downside momentum. What is the sign of loss of downside momentum? Look at the last candle of the last trading session. First thing is there is a support of EMA 55 also at this important demand area, and EMA 55 earlier has also provided some kind of support or a dynamic support to S&P 500. The price is trading quite in proximity of this important support area, which has a confluence of exponential moving average 55 period, and another support is this neckline area. So this becomes the demand area from 5,650 to 5,690. The last candle is an inside bar, and this inside bar indicated the loss of downside momentum. Where is the immediate resistance? There is an existence of a gap over here, and the gap is from 5,776 to 5,812. So this gap will provide some kind of resistance in S&P 500 during upside move of this index. But if we calculate the target, although the target of rounding chart pattern has been explained, but there will always be intermittent targets where the correction will again start, because ultimately the market moves in the Weyl formation. If we calculate and project the target based on this cup and handle kind of chart pattern, so let us calculate and do that. So I am measuring the height of the neckline and then projecting it. So the next possible target is 6,000, which is nothing but the 61.8% expansion level with respect to the rounding pattern or a continuation chart pattern, cup and handle kind of chart pattern. And 100% expansion comes at 6,223. So these are the two potential targets in once the trend resumption takes place and this gap is filled. The gap which I have explained is filled. The next target potentially would be 6,000. So overall structure is bullish. EMA 21 is placed above EMA 55 and SMA 144 is inclining up. SMA 200 is inclining up. SMA 233 is inclining up. The trend is bullish and it is still remains intact. So what
in
is
the
the
US stock
outcome
market.
of this analysis on the price chart of S&P 500? Number one, the price is trading quite in proximity of the important support or demand area, which means the correction is limited and reward potential is very, very high. And that is very important for any trader, where the risk is less and reward potential is higher to get the favorable risk to reward ratio. The only hindrance is the possible gap which exists in S&P 500 on upside move. The moment gap is filled up, then there will be significant upside momentum developing in S&P 500, which might take S&P 500 to the next target of 6,000 level. What is your opinion about S&P 500? Will it attain the targets which we have discussed in this video? Did you like this analysis? I'll be expecting your comments in the comment section of this video. Thank you very much for watching. Looking forward to meet you very, very soon.